Last week, Tesla ticked up the prices for 3 of its models in the U.S., the latest in a slew of price fluctuations so far this year. The EV maker's floating price strategy is unique among car companies. Typically, manufacturers set the price, or the MSRP, once a year. Customers can then do like I do. They haggle at the dealership. So the final price tag may be lower or higher than what the manufacturer originally set. But Tesla doesn't sell through a dealership. Instead, you buy a new car directly from the company. Pricing and price fluctuation, it's more transparent because there's no negotiating. So what does this shakeup in strategy mean for consumers? Joining us now, we've got Greg Migliore, who is the Autoblog Editor-in-Chief. Greg, good to have you here with us this morning. So kind of comparing and contrasting how Tesla has gone about this in their storefront strategy versus the typical manufacturer-dealer relationship, how does this kind of set the price pathway forward for a company like Tesla that has investors that still want to see it net a margin at the end of the day?
You know, it's really interesting. Thanks for having me, by the way. Car pricing has really been in the spotlight in the last few years for a variety of reasons. You know, the chip shortage, inflation, COVID, and they've all made it more challenging than ever to buy a car. Both new and used car prices are impacted. And, you know, with Tesla, Tesla being Tesla, it's been perhaps most amplified, most in the spotlight. I think Tesla specifically can be more responsive to market demands, and they're more willing to raise or lower prices. Obviously, this always gets a lot of publicity because Tesla is Tesla. But, you know, what's interesting is price hikes are actually not totally uncommon. Ford has raised prices on the F-150 Lightning, the Bronco, and other vehicles multiple times this year in response to supply chain shortages and some of the demand issues that I just laid out. So it's not totally uncommon across the industry. But in the case of Tesla, just to stop the car buying process is very streamlined. Just sort of before this interview, I was literally almost buying a Tesla online. You see the price, you can click, you basically add it to your cart, and away you go. So when that, bottom line number changes, obviously Tesla buyers are going to get pretty fired up.
Greg, it's Julie here. I mean, obviously you've covered the car industry for a while and much more closely than we have. Was there pre-Tesla, did we know when the big car companies changed prices, or was that something that was just sort of between them and the dealers?
So not so much. I think, again, the last few years with the pandemic and supply chain, that's really amplified the issue simply because people can't get the car they want, or it costs more than, they're used to paying. So that's been a really big challenge for consumers and also the industry. Dealers, OEMs are all very concerned about it. I would actually go even farther back to almost like the early days of the internet, when car sites started publishing, the invoice price and the MSRP, and you can see the difference because the invoice price is what the dealer pays for the car. So consumers, myself included, would print out what you think the car should cost and go in and just start arguing. Not everybody likes doing that. Ordering something online is a little more, it's easier, it's less confrontational. But to me, that's when this whole sort of like Pandora's box was opened, because consumers have greater visibility now than they ever have had before, as far as just knowing what they think their car should cost.
Some potential buyers fill up their Saturday morning coffee just getting ready to go haggle, Greg. So now, I mean, when we think about what's come forward in terms of even credits for electric vehicles, how does that change the negotiation structure or fabric for some of the dealers right now who are still going to be trying to move through, say, the F-Lightning or any of the electrified GM vehicles, these legacy automakers who have their own inventory to move through?
So for me, it's just another sort of bargaining chip, another card to play. That, hey, you might get up to $7,500 off, which is great. That. So that's a little bit of a buffer as a consumer. That being said, I think, the move is you just walk in and keep haggling, trying to get as low of a price, even start below the invoice price, and then see maybe where you can land. The tricky part, too, is does the dealer have that car you're looking for? Does it have the trim model, the color, all those different elements? And that also kind of can sort of maybe tip the scales back in favor of the dealer, because at the end of the day, they could always just say, hey, well, we have the red Mustang. Do you want it or not? Here's the price. So it's always a bit of a give and take, that's for sure.
Yeah, unless you're walking into a Tesla dealership, I guess, because then there's not much wiggle room. Greg, unless they're raising or cutting the prices like they're doing every week now. Greg Migliore, good to see you, Autoblog Editor-in-Chief. Appreciate it.